Hey, this is LaRon's Trading Playbook. I am LaRon, and this is the Operator Morning Brief. Here we track two things: bias, where price is likely headed, and narrative, the path the price takes to get there. Educational purposes only, not financial advice. Today, we cover news, macro, and futures. Today, we have some news dropping at 10 a.m. I'm not too excited about PMI dropping, but I will likely be trading after 11 or so, 11 a.m. I'm not looking, probably won't be looking to do anything until then. Yeah, that's pretty much how I play it on days when news drops at 10 a.m. It's usually when the better move is gonna present itself. But if we see something before then hey, um, I'm open to taking that opportunity. But the key news releases here, I mean, this week are obviously the NFP and core retail sales. That's what I'm looking forward to dropping. NFP obviously drops Wednesday 8:15, and core retail sales drops on Friday 8:30. So um, yeah, let's move on. But before we do, if you treat trading like capital allocation, scan the QR code and join the free Trading Playbook Discord. You can share your setup, get feedback, and run the liquidity rate model with me. Let's move on and see what the US dollar is doing today. All right, so overnight did have a price did gap up here. As you can see, this is the daily chart. We did get a rejection. Let's look at this really quick. Okay, so we took out this high, retested this order block, and it looks like we got a rejection from there. Hold on, let's drop down to the 4 hour really quick. Hold on, let me enlarge this. All right, so we respected this old daily volume imbalance. We hit this order block here and rejected from there. We're trading within this inefficiency here. We'll have to wait and see whether or not price wants to reach back up and retest this high, or uh, we want to retrace and retest the new week opening gap. Hold on, let me see. Let's look at the 1 hour really quick. All right, yeah, so this is looking pretty bullish so far this morning. We've formed a order block here, dug into this inefficiency. Hold on, dug into the new week opening gap and rallied from there. Now we're retesting this inefficiency. I like that we're respecting the consequent encroachment of the top side of this gap here. Let me see. So I like that we're staying above the upper half of this gap. So as long as we stay above there, there's no reason why we shouldn't retest these highs later on this week, if not today. All right, let's move on and see what euro dollar is doing. As you can imagine, is doing the opposite, where we retested this order block, this bullish order block, and we've price found support. I like that price is above the consequent encroachment right at this moment. It's really above the body of, hold on. Yeah, it's above the body of this order block here. So yeah, I like what I'm seeing there. Let's drop down and look at what's going on in the 4 hour. Yeah, um, I do like that we're, hold on, let me do something real quick. I like that we're staying above this order block here. Hold on. And as long as we stay above this, there's no reason why we shouldn't reach back up into this range. It looks like price really likes staying within this range at this time. It's not really, we haven't really made any significant moves. We on Dixie, we did reach up into this above this weekly high, which I was looking to happen last week. So um, that that we did break out of that range, out of the range temporarily, but that doesn't mean we won't go back down and reach back into it, especially since price has rejected from order blocks respectively on in each pair. But we'll have to see. There's no the U.S. dollar is looking bullish, so it's no reason it needs to come back down here. We've hung out in this area long enough, so if price is going to go higher, now is the time to do it. It doesn't really, we don't need to um, retest and reach back into this range, in my opinion. But we shall see. Um, we already met my objective for the week on 10-year yields. We did retest these relative weekly lows here. So we've taken that out. We can get rid of that really quick. So as I expected, we did, after taking out those lows, we did, price did um, rally a bit. Price tends to, I mean, not price, but the rates tend to rally when they come back down into um, this level here when we reach into this order block, which is, we didn't quite get down there, but whenever we come down into this range, price usually likes to hang out here or shoot straight back up. So I'm not saying we're going to necessarily do that, but um, my objective has already been met for the week. So what we do from here is up in the air. Hold on, let me see. Let's drop down to the 4 hour really quick. Yeah, price so far is it's not necessarily looking bullish. As long as we stay below this new week opening gap and this order block here, then I expect rates to maybe dig down a little into the 1 month bullish order block down here and take out this weekly low here. So we don't necessarily have to do that. Like I said, I just wanted to see those relative weekly lows taken out here. And yeah, what we do now is up in the air. I do not have any big expectations at this time. I'm just gonna wait and see what rates want to do. So with the macro being mapped out, let's check out futures, shall we? So this is the 5 minute. Let's look at the daily chart really quick. So as you can see, we did gap down on in the stock market, which is to be expected um, with respect to what's going on in the Middle East. But we're holding up pretty well. We're within hold on, let's get rid of that really quick. So we gap down. We have taken out this liquidity here. And let's make this larger real quick. So we're well below the last week's close, gap down, reach back up to the inefficiency, and rejected, price rejected from those highs for the week. And now we're trading just below the new week opening gap. So that's not really telling me too much. Let's look at the 4-hour chart really quick. So we are still trading within the daily dealing range here, and we did form the a new dealing range which we recently violated. This is the London rate high and the London rate low and the London rate high. But we did just barely violate the buy side liquidity, which in some cases that's all you really need if there is a significant market structure shift. Then that's honestly all you need. But we haven't got a shift yet, but we did violate the buy side liquidity here. So if there is a market structure shift, I would consider uh, taking an opportunity to trade to this low. But we haven't got that yet, and more likely than not, I'll be waiting till after 10 a.m. to do anything today anyway. But we shall see what happens. Um, so yeah, if I would like to, in the near term, I would like to see us reach up to this inefficiency. The contingent on what we do from there will determine what we do. What I would consider doing if we come up here and reject from these prices, we get a market structure shift, and price follows bearish order flow. I would look to for shorts somewhere in this range, in the range of the buy side liquidity down to this low here. But if we reach up above this inefficiency here and use it as support, I will be more cautious and be looking to wait. If we do that, more likely than not, price is going to take out this buy side liquidity here, but we have to wait and see what price does from here. All right, so it's pretty much the same thing with ES. We are well below the um, previous week's close. We gap down, reached back up into the new week opening gap, and now we're trading below it. The SP, however, is looking a little weaker than NASDAQ. Let's jump down to the 4-hour really quick. Yeah, where NASDAQ has already violated the London raid buy side liquidity, whereas ES is still trading below it. So ES is a little weaker to today, at least this week. I think ES is stronger in the long term, but we're looking pretty weak on at least on the daily with respect to the daily price action or today's price action rather. Yeah, so pretty much the not necessarily the same thing because ES has already reached into this inefficiency. It's looking like it wants to take out this buy side liquidity here. We could, if we respect this order block and get a market structure shift, like I same thing with ES. Well, I mean NQ. I'd be looking to take shorts into this low here. But I'm honestly cautious because price is looks like price one is still respecting this 2-day fair value gap, bullish fair value gap. So I would err on the side of caution If I was to short, it would more likely be ES, even though I mean not ES, NQ, even though ES is looking a little weaker. I'd be cautious because we've already respected this fair value gap here. So that's pretty much where I'm at with that. Pretty much same idea with NQ, but I would more likely short NQ if I was to see a market structure shift here. It's looking a little more likely to play out. See, we just gapped up there. Let's see what how price engages with this inefficiency here. Are we going to respect it, or are we going to violate it and respect it as a discount PD array? But let's take a look at gold really quick before we head out. Um, Gold has already met my weekly ob objective, honestly. Hold on, I think um, meant to tap the daily. So I was just looking for price to retest this opening price here, which it's already done. We gapped up and like reached up overnight. So we could possibly reach for all-time highs, but that's really going to be contingent on what the dollar does. But I am bullish on gold. I think everybody is pretty much bullish on gold these days. But yeah, my weekly objective has already been met though. So what we do from here is up in the air. I'll just be gauging price action as it plays out. It's looking bullish so far. Like we gapped up, we're well above the previous week's high. We dug down into the inefficiency a little bit, and we took out this high, took out the opening price that we were looking at on the daily chart. Um, and now we're pretty much just hanging around in this area right now, just consolidating, engineering liquidity. And this is the London rate low, London rate high. We've already violated. Hold on, let me get rid of this really quick. Get rid of that again. We've already violated the sell side liquidity. Look like we're respecting this inefficiency here. And if price wants to continue higher, I'd be looking at taking longs to this high here at least, or possibly hold on. We price could reach up above this buy side liquidity here, so that'd be another target liquidity. Um, let's do that. This one day buy side liquidity. So yeah, that would likely be my next target if I was to take a long. First target would be the London rate high, which is the dealing range buy side liquidity, and then second this daily buy side liquidity here. But we have to wait and see what price wants to do. Let's actually drop down to the 5 minutes, see what that's looking like really quick. So yeah, that's looking nice. I like that. We're still looking bullish. I like that this rejection that we're seeing here took out this the London rate low. If price can stay above that low, it's looking like it may not want to do that. It looks like we're reaching back up to this inefficiency and could possibly see lower lows. Maybe want to reach down for this sell side liquidity here. We do have some what look like relative equal lows. Let's check it out and see. Yeah, so price might want to reach back down into here and dig back into the new week opening gap. Like I said, my weekly objective was already met for the week on gold already. So I'll pretty much just gauge price action as it plays out. But yeah, that's pretty much it. So with the bias mapped and the scenarios determined, let me see really quick. Let us close out. But before we do, if you're building discipline, scan the QR code and join the free newsletter. I will send you the liquidity rate playbook and an execution journal designed to track your progress. I appreciate you being here. See you next stream. Shalom, shalom.